Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings to reveal the real story behind the numbers. So if you like straightforward analysis and no corporate jargon, then you are in the right place. Today we're diving into a very specific type of report, an 8K filing from Howmet Aerospace Incorporated. Now this isn't your typical quarterly or annual report detailing the full financial picture. Instead, an 8K is used to announce major events that shareholders should know about. Think of it like a company's urgent bulletin board. Howmet Aerospace is a big player in aerospace and defense, making really complex parts for planes and other critical systems. They're known for their engineering prowess and high-tech manufacturing. Before we get into the main event of this filing, let's quickly glance at the company's stock. They have common stock trading on the New York Stock Exchange under the ticker HWM, and they also have preferred stock listed on the NYSE American Exchange with the ticker HWMPR. The big news here, the reason for this 8K filing, is a planned redemption of their preferred stock. This means Howmet Aerospace is buying back all of its outstanding preferred shares. They're calling in all the chips, so to speak. This is happening on the 17th of December, and they're paying $100 per S-share for them. On top of that, they'll pay any dividends that have built up but haven't been paid out yet. So for every share of preferred stock, they're shelling out that $100 redemption price plus an additional $0.8125 for accrued dividends. It's a pretty straightforward buyback, but it is important because it affects those preferred shareholders. To give you a sense of scale, as of mid-November, there were over 500,000 shares of this preferred stock out there. So they are indeed redeeming a substantial portion of their capital structure. What does this really mean? Well, companies often do this to simplify their capital structure, reduce dividend payments, or if they believe they can get better financing elsewhere. For Howmet, it might mean they feel their common stock offers a better investment opportunity, or perhaps they've secured cheaper debt. Now, this filing itself isn't the official red notice. The company states clearly that the actual detailed redemption notice will be sent separately to the shareholders. This document is just the public announcement that it is happening. Like many of these reports, to raise a section on forward-looking statements, this is essentially a disclaimer. Companies have to tell you that as they talk about future plans like this stock redemption, there are risks involved. They're saying, hey, we plan to do this, but things could change and the actual results might be different. This is pretty standard legal language to protect themselves from lawsuits if things don't go exactly as planned. They list a bunch of potential risks. Things like a downturn in the global economy or tough trade policies can mess with their business. They also mention the risk of cyber attacks, losing big customers, or problems with their suppliers. It's a comprehensive list of potential pitfalls that could affect their future performance. And as always, the report is signed off by company officials. In this case, David Crawford, Vice President and Treasurer, has signed off on this filing, indicating the company is officially acknowledging this event. So to wrap it up, Howmet Aerospace is making a move to simplify its finances by buying back its preferred stock. It is a strategic decision that could have various implications down the line. From an investor's perspective, it signals a shift in how the company is managing its capital, potentially leading to a more streamlined balance sheet or greater flexibility for future growth initiatives. Now, looking at this from a slightly broader angle, this kind of move by a company like Howmet often happens when management feels confident about their core business operations and future earnings potential. They're essentially saying they have enough cash flow and financial strength to retire this debt-like obligation of the preferred stock. It can also be a signal that they believe their common stock is undervalued relative to their preferred stock, making the buyback an attractive financial maneuver. It is not necessarily a sign of strength or weakness on its own, but rather a tool the company is using to optimize its financial structure. Keep an eye on how this impacts their earnings per S-share and their overall debt to equity ratio in future filings. Alright, that is our quick decode of Howmet Aerospace's latest 8. What is your take on this preferred stock redemption? Do you think it is a smart move? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more corporate deep dives. And hey, join our growing community on Discord. The link is in the description. Thanks for watching Corporate Decoder, and we'll see you in the next video.